In this episode, I'm going to talk about where the Australian property market is heading in 2025, how you can jump into markets that are on the upswing, but also where to avoid the areas that are in decline. My name is Adam Panisi. I've got a couple of $100 million of my own property projects at the moment. I've transacted hundreds of properties. And the reason I do these videos is to help you guys out, jump into the property market and make money and not have to sign up for the 30-year mortgage plan or the 40-year work 9 to 5 and retire on the pension. I do also have advanced training programs as well. You can check them out on the link below. I cover buy and hold, renovation, and property development strategies in those from my personal property experience over the last 15 years. I'm going to pick on a national valuation firm called Heron Todd White, who produce a quarterly report. This one is from December 2024, and it's specifically aimed at houses. So I'm going to go through their property market clock and give you my synopsis, what I think each market is doing, and also how these guys, I believe that they're right in certain areas, and then other areas I think they're way off the money. So not to bag out property valuers too much, but I do deal with valuers almost on a weekly basis, and I see the major flaws that valuers, economists have when they predict the market. And the biggest one being is that they're not actually in the markets. They don't know people specifically in those markets, and they haven't had that experience, that skin in the game to actually know what each individual property or asset or an area specifically is actually doing. Now, some of those, and they are the 1%, do know what I'm talking about, but for the better part, if you rely on a valuer or an economist to give you their forward projection, based on what we've seen, especially in the media, chances are, if you listen to those guys, you're going to be making the wrong decision. Let's go through Heron Todd White National Property Clock, and I'm going to start off with the declining market. I'm going to go the ones where I tend to agree with Heron Todd White, and then I'm going to tell you the ones where I definitely do not agree, especially the markets where I know very, very well. So let's go declining markets. Melbourne, completely agree with that. Most of Melbourne is in a declining market. However, there are a couple of hotspots where I think are going to do some really good growth. Probably the back end of 2025, but there's some really good buying under $500,000, under $600,000 where you can get 5-6% yield pretty much straight off the shelf. Bottom of the market, Ballina, Byron Bay, Coffs Harbour, Geelong, Hobart, Lismore, Southern Highlands. That's what they think. Now I'm just going to comment on the ones that I know of. I think that Ballina and Byron Bay probably still has further to fall in my view, so I think that those are still declining markets. Coffs Harbour is probably going to be in the same boat. Geelong, I think that that's got further to fall, especially with Melbourne and the rapid declining in that market, and Geelong being in oversupply in most parts. So now let's go to the start of recovery ones. So Albury, Canberra, Central Coast, Illawarra, Newcastle, Wodonga. I'm just going to make comment to the ones where I have some experience in and clients are investing into. I do think Canberra's probably got a little bit longer to run in terms of being at the bottom of the market, possibly even markets within there still declining. I do agree that the Central Coast is at the start of the recovery, so there could be some good buying opportunities in Central Coast. The next little bit, Newcastle, I tend to agree with that as well, that it's in the start of the recovery. Now let's jump over to the rising market. And you can see that Perth is highlighted there for whatever reason. So Perth is in the rising market. Adelaide, go from the left-hand side, Adelaide Hills, Barossa Valley, Broome, Cairns, Emerald, all those locations. I'll let you guys read the list of them. Fraser Coast, Geraldton, Gladstone, Gold Coast, Kalgoorlie, Karratha, Mackay, Perth, Port Hedland, Rockhampton, Southwest WA, Townsville. For the best part, I tend to agree with most of what they've put in the rising market. There's a couple of outliers which I don't necessarily agree with 100%. One is Perth. I do think some Perth markets within that entire Perth market itself, some Perth suburbs, are going to probably feel some pain at the back half of 2025. And I did say that even in 2024, I did say that watch out, be careful of Perth, because there's some definitely overheated markets in Perth that I think are going to experience some pain the back end of 2025. I've got clients buying or have bought in Rockhampton. I still have clients buying in Perth as well for that part, but we monitor those particular suburbs that we're in and make sure that we're not jumping into a suburb that looks like it could be on the decline in 6 months' time. So I've got clients jumping into Rockhampton. Rockhampton has done phenomenally the last little bit. So that's, for those people that don't know, that is Queensland regional, but a fairly large regional hub. And it's also the town I grew up in. Townsville, agree with that. Obviously, there's better parts of Townsville than the other parts. I don't necessarily believe that if somebody's flogging you a property in Townsville or Rockhampton that it's going to do phenomenal growth, because it may not. Then on the other part of the rising market, so Fraser Coast, agree with that, but it's only rising slightly. So Fraser Coast is Queensland coast. However, you are in a very regional market there, so I'd just be very cautious. Gladstone, I tend to agree somewhat, but Gladstone, and I've actually lived in Gladstone for periods of time, and I've witnessed those boom and bust markets in Gladstone, especially very, very finicky market, and a lot of interstate investors have been burnt in Gladstone. So I'd say unless you know that market intimately, I would just stay well clear to make sure that you're not going to get burned. Gold Coast, yes, it's a bit of a mixed bag, Gold Coast. Near where I live in the Gold Coast hinterland, but I've watched Gold Coast market over the last couple of years, and it's a bit of a funny one. I think you've got a bit of a two-speed market. Some houses sitting around for longer. Other houses, nice new luxurious houses, are just flying out the door at crazy prices. And then you've also got the bottom end of the market, which is still quite expensive, where people are fighting over multiple properties. So there's a bit of a two-speed market, but I do think Gold Coast will see some good growth into 2025. The other regional parts of Western Australia, like Kalgoorlie, Karratha, it looks like they're still going to go up, but again, I'd still monitor those markets. They're quite finicky, they're small, there could be some pain the back end of 2025. Mackay, I think, will do well also. Again, back end of 2025, because Mackay is heavily reliant on mining, I'd be just keeping an eye on what the property market is doing, and look, it might just keep powering past 2025. It looks like that sort of region, that central Queensland region, is well under supply, hardly any supply coming to market. So if mining stays good, in other words, if that demand keeps up, then those markets could see another couple of years of growth potentially. But you've obviously we don't all have a crystal ball, so you just got to monitor those markets. Adelaide has got very low supply, very low upcoming supply. But one thing that Adelaide doesn't have, which a lot of our other markets do that are in growth, is that massive influx of people, migrants. So Adelaide, I think, will do well this year again, just off the back of another year, but it's in different pockets. Some pockets I think will do zero, other pockets will perform well. And then one of my other favorites, Cairns. I think Cairns will do phenomenally well in 2025 if our dollar remains low, which I think it probably will. Cairns will be bolstered by tourism. Cairns is a very boom and bust market as well, and it is at the start of that market cycle in the boom cycle, and it's well and truly overdue for a boom. And also prices there are so cheap that it's just driving investors to jump in that market, and also yields are very high as well. Emerald, I would be very cautious about buying in Emerald. I've seen a lot of pain in those areas that are heavily mining reliant and very small towns like Emerald. But I haven't specifically looked at Emerald, but my clients and myself are definitely not buying in those small regional markets that are very finicky. Now, these other ones where I definitely do not agree with, right at the end of this market cycle clock, is Ipswich. I don't like Ipswich as a region to invest in, but I do not agree that it's approaching the peak of the market. I definitely don't agree Sunshine Coast is approaching the peak of the market either. I think both of those locations probably should go in the start of recovery, especially Sunshine Coast, and possibly Sunny Coast. I'd probably put it in the bottom of the market. It's had 2 years of basically no growth or very minimal growth in Sunshine Coast. It's heavily undersupplied. It is slow at the moment. However, there's no supply. It's very hard to build houses out there, with the price of building is actually the most expensive in Southeast Queensland. So I know Sunshine Coast market intimately. I have looked at multiple properties there. I own various different properties of different sizes and shapes on the Sunshine Coast, so I know it really well. And I would bet all of those properties that it definitely is not approaching the peak of the market. And I also will second that with Ipswich, although I don't like Ipswich generally because there's a lot of land availability and properties can sit around. No one really wants to live out at Ipswich unless it's for affordability or for work. I do think Ipswich will probably grow off the back of Brisbane, which is on the next one. So the peak of the market. So you got Brisbane, Bundaberg, Dubbo, Sydney, Tamworth, Toowoomba. So I'm just going to start on the left-hand side with Brisbane and then Bundaberg. Brisbane is definitely, in my view, not approaching the peak of the market. We've only entered into, for most of the part, the last year of boom in terms of property price boom. There's low supply, very little supply coming up. There's strong demand. There's increasing employment opportunities, especially with the hype of the Olympics. There's also a lot of infrastructure projects getting built in and around Brisbane, Southeast Queensland. We've got a massive influx of interstate and overseas migration. So for Heron Todd White to put Brisbane at the peak of the market, I completely disagree, even more so than Sunshine Coast. Brisbane has some really key fundamental underlying economic drivers where I think Brisbane is actually in a rising market and should be put with the other ones in that rising market. And I do think Brisbane overall has got another couple of years to run. And I'm specifically developing personally in and around Brisbane, so I am seeing what land supply is coming up, what's on the ground, how prices are moving, and also because of the low supply, how developers are actually driving prices up. And I've been fortunate enough to have the advantage of having hundreds of land lots in the pipeline and watching those prices go up by 10, 15, 20% just in the last 12 months. And that is not due to slow down because there's literally no supply. There's heavy investors driving the market, especially from down south. Our rental yields are quite high, and there's also a big push to owner-occupiers with the new Queensland government. So that is going to be interesting. And Heron Todd White obviously does not understand that, and they've just plonked it on the peak of the market. So that's my 2 cents about Brisbane. Bundaberg is another one. I don't think Bundaberg is at the peak of the market. I do think it's probably going to have some steady growth over the next year, but with the baby boomers, a lot of people retiring into that Bundaberg region. Again, it's a regional market. It's finicky. I think personally, I wouldn't invest there, and I did a separate video on Bundaberg and another couple of regional areas like Townsville and Rockhampton. I personally wouldn't invest in Bundaberg, but I don't think it's at the peak of the market just yet. I think it's probably still got a little bit longer to run. And then for the other ones, I won't comment on the ones I don't know or ones where clients aren't investing into, but Sydney is a bit of a mixed bag, but generally speaking, I think Sydney should be positioned at the bottom of the market or the start of recovery, or at least the areas that I've looked at or where clients are either investing into or developing. So I think that Sydney in 2025 will actually see some good growth in certain pockets. And the reason I say that is because I'm looking at Sydney in certain areas that are in massive undersupply. Price growth has not really been there the last few years, so it's been sitting stagnant, but there's a very tight supply of housing. Affordability is really the issue with a lot of Sydney market. But as interest rates start to come down, there's still no supply, heavy immigration, major capital city, obviously the capital city, the biggest population in Australia and also the biggest population growth. You've got economic drivers where people need to work or do have work in Sydney. So I think that Sydney will actually bounce back. It may be the second half of 2025, but I do think Sydney is going to probably experience some growth this year, and I definitely don't think it should be at the peak of the market. Toowoomba, I think it's probably approaching the peak of the market. I don't know of any of my clients that are buying into Toowoomba. There was some time ago where we were getting into Toowoomba, like a lot of other people, where prices were still quite low, but they have boomed quite a bit. So I won't make too much comment about Toowoomba because I haven't specifically looked as of late. But that is my synopsis on Heron Todd White National Property Clock for houses. So I've mentioned before about valuers economists making predictions about property markets or just about the markets in general, and they come out to the media and they say either the market's going to crash by 30% like in COVID, or the market's going to grow by 10 or 20%. They generally don't say the market's going to go to the moon. They normally tell us when there's a crash coming because bad media sells more publications. So the issue I have with us or general public reading or listening to the media or having a look at national valuation firms or economists is the reason we're actually getting fed this information is to condition us or condition the masses into what is going to happen. And normally by the time you hear it on the news or in the media, it's actually too late. So now that everyone's jumping into the Perth market, I actually think for the majority part, it's too late. There's still some good opportunities there, but now everyone's jumping in because of the FOMO. They all think that Perth is going to go to the moon for the next 2 years, and we're just going to have a look at the last 2 years of growth. And unfortunately, the same happened with like Bitcoin, cryptocurrency. Everyone jumped in too late and they all got burnt. So the difference between say me analyzing or having a look at these markets, I'm looking at them through a different lens. I'm looking at them through a lens where I have transacted hundreds of properties. I've got a lot of skin in the game. I'm actively doing property projects, both buy and hold, in my own property developments, different forms of renovations, again, within a bigger property development project. I've got commercial properties on the go as well. So I'm across various different markets. Admittedly, personally, I am in all Southeast Queensland, and I've got some feelers out to other markets like Sydney and Melbourne personally. But I do see not only my own or properties that come across my desk to purchase, and also the ones that I'm actively involved in now, but I also see my clients, my students' deals come across my desk. So I see where people are buying, and I do have students buying all around Australia in different markets, but there's definitely markets within markets. So you can still buy in an area that on the surface may look like it's doing zero growth. For example, people bagging out Melbourne, but there's some good pockets still in Melbourne that will probably do 10 or 15% growth this year. And if it's a house or a unit in your backyard and you get a good deal, buy $100,000 under market value or $50,000, whatever that is, you can still make good money in areas that are so-called declining or at the bottom of the market. However, if you jump onto markets that are doing like 20, 30, 40% growth, like I did an analysis of some regional Queensland markets, and there were suburbs within that where I actually did as part of my program, and those suburbs, those areas have done in the last 12 months like 30% growth. At least some of them even more than that. So we've had some students make $100,000. I was kicking myself because I had to sell a property. I recycled that capital into a bigger project, but I sold it and I knew the market was going up, and that market ended up doing another 30% growth, but it had already done about 30% growth the year before. So I sold it a bit too early, recognizing that there was still some market cycle left to run. But I recycled that capital into another project that ended up making me a lot more money. So it didn't really matter at the end of the day. So if it's you looking at properties and you're looking at one property in one area, how is that one house, that one unit, how is that going to perform? Because it doesn't matter whether the rest of the market does 5% growth or 50% growth. How does your one property perform, and what difference does that make to you in your life? Is it a $50,000 difference? Is it $100,000? Or is it negative $50,000 or $100,000 difference if you listen to the wrong person? So we can all look at these videos on YouTube, consume all this free information, but at the end of the day, you've got to make a decision whether or not to proceed with a property purchase. And that is a significant decision, the biggest financial decision of your life. So you don't want to screw it up. And in my experience, and when I was going through getting knowledge or getting educated about property, I wanted to get as much knowledge as I could because I didn't want to stuff that decision up. And unfortunately, I'd seen other people stuff it up. I'd seen other people do really well. But at the time I jumped into the market, I just wanted to make sure that I was making enough money so I could quit my job. And that was actually my driver. So back to the topic of listening to economists, listening to even people like me, do the research yourself, see the numbers yourself, and get that knowledge so you don't have to rely on any particular one person. You can look to particular people for guidance, and you might agree with them, you might disagree with them, but make sure you have a substantial basis to form an opinion about a property. And it's only one property that you're going to make a decision about. And when you make the decision to pull that trigger, that could be a $500,000 financial decision. It could be $1 million financial decision. You want to know with 110% confidence that that is the right decision that you've made for yourself and your family and your financial future. Thanks so much for listening. If there's any areas you want me to analyze in the next video, just drop them in the comments below.